Hey guys, this is going to be a look at ZB on various time frames starting on the weekly log chart. So, uh, I've sort of been the base case scenario is that these spikes outside of the channel here and here were the third and the fifth waves of a third wave going up, and that this spike was the fifth wave of a fifth wave, a blow off top uh, that possibly ends this entire secular trend. And you know, I see this fractal all the time on ZB and various time frames where ZB will establish a channel and then blow out of it on third and fifth waves, which is why to me this pattern is immediately recognizable. Um, and to sort of the first step in confirming that this is a top is you need five waves down that would indicate a potential change in trend. And so, actually, if I just do a screen capture so I can annotate this more easily. Um, Actually, I cut it off right there. So the last time we crossed the channel, it seems to be a very clear three-wave pattern, right? We had an A down, a B, and then a C, like that. And even this C wave subdivides very cleanly into five waves. One, two, three, four, five, like that. And so we need to see five waves down, and I think arguably we're there. This first wave, the volatility was so high that it's kind of a mess. This one down is not a traditional impulse wave. You have to look at it as a leading diagonal, maybe. But anyway, there's a one down, and then a three wave two up, and then a three down to the bottom of this channel created by drawing from the bottom of the one to the top of the two. The three touches the bottom of the channel. If this was a fourth wave triangle and the apex was right here, then there's a fourth wave to the opposite side of the channel. And we have arguably bottomed here in a fifth wave that hits the median of the channel on a bullish RSI divergence on the weekly chart. Price makes a lower low, RSI makes a higher low. It's not even oversold here. There's another scenario that we'll talk about, but it is possible that this is a bottom and that this is five waves off the top. This is sort of mission accomplished right here for bears. And so when you have five waves off the top, the axiom is that it's either ending something or it's starting something. And if it's ending something, it needs to be the C wave of a corrective move. For example, if it's an expanded flat correction, then the C wave should sort of fill in a broadening megaphone formation, and you should be able to see overlapping A and B waves back here, but we don't really see that. And if it's a C wave and a flat correction, you should be able to look back and see an A wave and a sorry, you should be able to see an A wave and a B wave or something, and we don't really see that. So sort of a common sense view is that this isn't ending a correction, it's beginning something. It's either an A down and we'll get a B retrace, and then corrections can grow very complex. There's no sense in enumerating the possibilities. So this is either the start of a more complex, deeper correction, or it's a change in trend. And we're going to have a retracement and then have a third wave down, which is, arguably the hyperinflation scenario. So, I follow traders who are looking at the yield chart channel, and they're arguing that there's no sense in talking about inflation until we break this channel. And yeah, on a 2 hour chart, when you have a trend line or a channel, it's very common to break it, back test it, and then get continuation. But I wouldn't expect that on a weekly log chart. I think the first step in a change in trend is 5 waves down and then simply making a lower high. And so I measured this channel going up. It's ascending at an angle of about 16 degrees, more or less. And so just as a thought experiment, I put a line going down off this top angled at about 16 degrees. And so we could, if this is a intermediate bottom right here, we could, if I grab a fib, we could retrace deeper than the 618 right here. We could retrace all the way to 181, I think, and it would not be a problem. So, given that this to me looks like 5 waves sort of all day long, unlike this structure back here, if the first step in confirming that this is a bottom is we have to break this weekly log channel, right? This is a scenario where you could break out of this channel and then back test it. If this turns out to be a trending wave one up, and then we get a back test and then continuation, that I think that's the end of this trend. But we're still not there yet, and it's still possible that there's more downside to go. So all of this is simply to say that after we break this channel, whenever that is, and we start going up, it's not clear sailing, I don't think. You're going to have to watch every significant retracement level on the way up for resistance, potential resistance, for a continuation of either this correction or this new trend. Is that everything I want to say on the weekly chart? I think so. So on the daily chart, let's just look at this fourth wave down here. Yeah, let me redraw. Or no, it's on there. Okay. Let me take another photo. So we made this bottom here of a presumable wave 3, and then we had what looked like a clean 3-wave correction, and it looked like we were going to rip lower, and then we didn't get the continuation here, and it turned into a choppy mess. And we are looking at whether this might turn into a triangle, something like that. And there's one issue with that pattern. So we got 3 up, and then 3 down, arguably, and then 3 up, and then 3 down, and then we got 3 up right here. And I was really expecting them, this was the short from highs, I really was expecting them to whipsaw the 618 line. But what I was not expecting was this wave making a higher high relative to this one. That is a major league FU overthrow right there. And I'm not sure if it negates the triangle pattern, because there was a pretty clean downtrend right there. I was expecting a push through, and it just went further than I expected. So is that just a major league overthrow, and this is still a valid triangle? That's what I'm going with. The clearest thing on this chart is that if this was the end of the fourth wave and the apex of the triangle, and it actually meets the weekly log channel coming down, then it dipped into the 618, but it ran from a 618 retracement to a 618 target, and it had a reaction both at the 236 target and the 618 target. So all day long, this is clearly a 1, 2, 3, 4, 5-wave impulse coming after the possible apex of that fourth wave triangle right there. And so the question simply is this all of 5? They made a lower low, or is that 1 of 5? And now we're working on a 2. We're going to come up here and consolidate before the next FOMC in a couple weeks, and then have a 3rd, 4th, 5th down. All of 5 or 1 of 5? That's the question. And so on the chart, we have let's see. We have broken the next, in we've broken the 618, or we've dipped into it, which is honestly almost expected nowadays. There's a deeper stealth fib resistance level where I've put this box right here, and so and there's also it's worth tracking the short from highs. It traded here for I don't know, 2 or 3 FOMC meetings ago, and then it dipped in, but it traded essentially here at the end of that fourth wave consolidation. So if you want to draw the short from highs again, that is probably worth keeping an eye on, and that sort of coincides with this sort of stealth resistance zone right here. So we are flipping over into the new contract, and what they did last time was they rallied for 1, 2, 3, 4, 5, 6 days up into that major league overthrow right there. And so we're on day 3 of a pretty fierce rally. And so, it's a question. Are they marking it up in order to sell the contract for the next quarter, marking it up into the FOMC meeting, or is this a meaningful bottom? Is that everything on the daily chart? I think so. So on the hourly chart, just looking at this price action off the bottom, um, it's kind of funky because of the contract rollover. But if I take one more photo here, um, this was a clean 50% retracement. This cannot be a 3 and a 4 because of this overlap here. So that's either a 1, 2, and a 1, 2, and yet another 1, 2. And this is a pretty clean 1, 2, 3, 4, 5 right there. And we seem to be meeting some selling finally. So that's a wave. I'm trying to view this as some sort of corrective, counter trend corrective pattern. You can't argue that it's a bull nest, right? 1, 2, 1, 2, 1, 2. This was a third wave. We're going to get a fourth wave, another third wave, another fourth wave, and then a fifth wave. So it'll be one big wave 1 off the bottom. I guess the level I'm watching, again, I'm watching this resistance zone around 160 to 161, and this last measured move right here has a 618 target in that zone as well. So I'm sort of viewing anything between 160 and 161 as a potential sell zone, depending on a lot of other factors and what's going on with ES and a lot of other. It's a real-time trading decision, but that seems to be the next resistance zone, potential resistance zone. And it's worth noting that we've reconnected with the weekly center line. This channel is coming down, and if we go sideways for a week, it's gonna be yeah. If we hit it next week, it would be around 160 also. So there's a confluence of reasons to be a seller up here. It would be surprising if, well, I don't know. That's my thought. I'm sort of divided on if the next move is breaking out of the channel, back testing, and continuing, or if we're going to get a third wave down, which should be pretty strong. But we have seen those doing the short from highs coming out of FOMC meetings. I think that's it. All right. Thanks, guys.